Welcome my dear students to our e-learning platform. In this video, we are going to learn the final segment, which is public limited companies under our second lesson, classification of business organizations. So let's see what we are going to learn under our commerce lesson today. First, we will be focusing on the public limited companies, which falls under the final business organization of private sector, and finally we will be focusing on the common features of limited liability companies. By now children, you are very familiar with private limited companies. So what is the difference between private limited companies and public limited companies? Private limited companies can't sell their shares to the public. But a public limited company designates a limited liability company that can offer shares to the public. A public limited company also belongs to the family of limited liability companies, just like private limited companies. In these types of companies, shareholders can't be held responsible for any business losses in excess of the amount they paid for the shares. So if you are a shareholder of a public limited company and you invest 500,000 to obtain shares, then you are liable only to that 500,000 or the value of your share in case of losses of the company. Public limited companies are of two types. As you see on the screen, listed companies and unlisted companies. What are unlisted companies and listed companies? Listed companies are those which are included and traded on the stock exchange. But now I know a question popped into your mind. What is this stock exchange? A stock exchange is a place where individuals or companies buy and sell shares. Nowadays, it exists as an electronic marketplace. In Sri Lanka, the main stock exchange is Colombo Stock Exchange, which is one of the exchanges in South Asia, providing an electronic trading platform. Operating much like an auction house, the stock exchange enables buyers and the sellers to negotiate prices and trade shares. Due to different fluctuations in the market, share prices vary time to time. These are visible in a stock exchange. So, these listed companies which are registered in the stock exchange use the term PLC after the business name. For example, Dialog Axiata PLC, Odell PLC, HSBC Holdings PLC. So, these are listed companies. The other type of public limited companies are known as unlisted companies, which are basically not registered in the stock exchange or not listed on any stock exchange, but can have an unlimited number of shareholders to raise the capital for any business venture. These types of businesses end their name with limited. For example, Ceylon Business Limited or Ceylon Shipping Corporation Limited. Focusing on the features of public limited companies, the main feature is that it has limited liability, which means that the liability of shareholders are only limited to the value they have invested. In other words, the private assets or personal properties of shareholders are not at a risk in case the company fails. There should be a minimum of 2 shareholders and 2 directors. Directors who are either appointed by shareholders or sometimes a shareholder can become a director. But there is no maximum limit of shareholders to join PLCs or public limited companies. Therefore, there are a large number of owners. I hope you remember the term shareholder, which is used for the owners of limited liability company or holders of company shares. These types of companies can raise more capital as they sell shares to the public, and therefore these are usually large-scale businesses. Few public limited companies which are large conglomerates in Sri Lanka include Dialog, Commercial Bank, Ceylon Bank, John Keells Holdings, Navaloka Hospitals. And since these are large-scale businesses, they can enjoy economies of scale and also reduce cost per unit. However, there are few disadvantages of these types of businesses, like there are many rules and regulations to follow, government puts a lot of control over these businesses, and another major disadvantage is that it is difficult to control and manage. However, the advantages include limited liability and can raise more capital, since these are large-scale businesses and sell shares to the public. Now let us focus on some general features which are common to both private limited companies and public limited companies. As you know, in order to get the ownership or become an owner of a limited liability company, you have to purchase the company's shares, and then only you become a formal shareholder of the company. Usually, profits are shared among the shareholders according to the percentage of ownership they hold in the company. So we call the part of profit shared or the sum of money paid by the company to its shareholders out of its profits as dividends. In order to calculate the ownership percentage, we can utilize this simple equation. Ownership is equal to shares owned divided by the total shares issued by the company multiplied by 100. In case a shareholder has 50% ownership, that means he owns 50% of the company and he should get 50% out of the total profits the company receives. An example of calculating ownership is done for you. In that case, Tevin buys 300 shares and the company issues a total of 1000 shares. So to calculate the ownership of Tevin, you divide 300 by 1000 multiplied by 100. That is equal to 30%. So Tevin owns 30% of the company. This instance is very similar to when you and your friends buy a cake by collecting money from each and divide the cake pieces based on the amount you invest to buy the cake. Some other limited liability company features would be that these limited liability companies are owned by shareholders by purchasing company shares. However, these shareholders can appoint a board of directors to control and manage the company. These board of directors are responsible for taking management decisions as well. And also, if a shareholder wishes to become a director, then obviously he can. Therefore, remember, sometimes a shareholder can be a director as well. So again, remember, limited liability means in case of losses incurred by the company, shareholders will not have to sell their personal property and they will be only liable to the value of the share they invested. To sum up lesson number 2, let me remind you the most important points discussed. There are two main sectors that business organizations are operating under, namely public sector and the private sector. Public sector mainly focuses on the social welfare and providing essential services to the citizens of a country either free of charge or at a nominal price. They also provide job opportunities to the citizens of a country. However, the private sector runs to maximize profit. And under this sector, we discussed 4 main organizations: sole trader, partnership, private limited and public limited companies. So if you can remember, sole trader business were single owner businesses and they have minimum rules and regulations to follow. They also come under the family of unlimited liability companies. Very easy to establish a sole trader business. However, if a sole trader wants to expand the business operations, the best option would be to form a partnership. In partnership, there are minimum 2 partners and maximum 20 partners. And also, even partnerships falls under unlimited liability companies. And in a partnership business, the losses as well as the workload and responsibility can be shared, but even the profit has to be shared, which comes under a disadvantage of a partnership business. Next comes the limited liability companies, which are private limited and public limited companies. Private limited companies are usually family-owned businesses. They can sell shares between friends and relatives, but they can't sell shares to the public. Owner invests money to buy shares and then only they become shareholders or owners of limited liability companies. Then public limited companies, on the other hand, can sell shares to the public, and there are 2 types of public limited companies such as listed and unlisted companies. Usually these public limited companies are large scale companies. So students, now we have reached to the end of this video and lesson number 2, classification of business organizations, comes to an end. Thank you for watching this video and stay tuned for our next video on lesson number 3, human resource management.